What's going on, everybody? Welcome into another video from the Bulls and the Bears, where I show you how you can make safe passive income in the market using the options wheel strategy. I've been doing it the past 3 months right now. It's been working very well, very safe, easy money. I hate to say easy money with the stock market because the stock market is not easy, but I can't help but think that it's easy money. It doesn't take much work. It's very passive. Once you do the game plan, once you have the game plan, which you can do on the weekend on your own time, Monday morning comes, you execute the plan, and then you wait, hands off the whole week pretty much. You can check the stock here and there throughout the week, but there's really not much management you have to do. And it's very good, very conducive for like a day job, which is my situation. As of like, your regular day trading, it's tough. If you have a day job, you can't really day trade that well, depending on your situation. So this is actually a good substitute for that. It's not a whole lot of money, but it's relatively easy money. And if you take the risk off the table, usually the reward's lower, but I'm okay with this. If I can make a few $100s a month extra on top of my day job, I mean, how can you hate that? So we're going to get into last week's plays, what I did last week, which is all explained in my last video, but I'm going to go over the results of that game plan that I made last week. I'm going to go over my game plan for next week, and then the exciting part, I'm going to go over my month of June. Last week was the last month of June. So it's all wrapped up. I'll show you my total profit for the month. I'll catch you up to date with my total profits over the past 3 months since I started this and where my account sits and the percentage gain, all that crap. So it's going to be fun. We're going to first go over last week, then we'll do the month in review, and I'll catch you up on my Excel file and everything, all my figures, and then we'll go over next week. So we'll start with ZIM. This is one that I played last week that worked out. I sold the 4150 strike, which is noted here by the horizontal line. It had to stay above 4150 by the vertical line, which is why I have that here, and clearly it did. It closed at 43.28. It came pretty close. Friday was a scare, gapped down, sold off, but stayed above that level. I made sure to keep my cash secured put far away enough to be safe from the current price and any possible drops, but yet close enough to get a decent premium. So 41.50 was the happy sweet spot for that. And you can see if I zoom out, it was a solid area of support. I mean, it was resistance back here in 2021, then it became support in 2022. Never looked back until recently. It didn't really quite get down there, but you can see just by the chart, it's a reasonable area where you'd expect the stock to kind of stall out from dropping, maybe start to pop up. So I felt pretty good about that level, and it worked. And I captured the full premium. I did not close it early. I let it expire worthless. I captured 100% of the premium, which ended up being $20. It was actually less than my quote-unquote minimum. I say I want to get at least $25 per contract. I actually had to settle for $20 this time around, which, because I had a very hard time getting filled on it. The options chain isn't very liquid on this name, and I really wanted to play it because I didn't have another good option. So instead of not getting any money from it, I just settled for $20. So that's okay. That one worked out, and we're done with that. So ZIM in the books, full 100% gain. The next one was MOS, Mosaic, ticker symbol MOS. This one worked out very well. I sold the 43.50 strike. You can see, if I zoom out, you can see how it was resistance back here, then turned support, just like ZIM. Never looked back, and as soon as it came back down, I wanted to see it hold up. On the weekly chart too, I noticed there was a 50 moving average that it already hit off of last week, and looks like it held up again this week. So another reason, another point of support in our favor, and giving us confidence to sell that strike. Again, did not close it early, let it expire worthless, and I captured the full $35 premium as profit. So that one worked very well. And that's the end of the names that worked very well. I still have 2 more names to go over, and they did not work out, as some of you may already know. Let's go over the big one, Kohl's. Boom, look at that. The last possible day of the contract's life, that's when we have a major gap down and the stock drops just about 20%. 20%. And, that's something that we were aware could happen, possibly. The only reason I've been playing Kohl's week after week after week the past month is because it had a catalyst. The Franchise Group, which is a company, the Franchise Group, Franchise Group, they were looking to buy out Kohl's for $60 a share. So that was big. A lot of possible volatility there, because if the deal goes through, the stock could jump up to $60, which is a huge jump from where the current price was, around 40. Or if the deal doesn't go through, obviously the stock could drop a lot. So there's a lot of high implied volatility, which made the premiums on a lot of contracts, even way out of the money, very juicy and favorable. So that's why I was playing calls this whole time, because it was offering such good premium at an affordable strike. But at the end of the day, it's kind of playing with fire, because you have that big catalyst that can really move the stock. The premiums are high for a reason, because the implied move on the stock is also high. The franchise group buyout with Kohl's did not happen. That was completely canceled. I believe Kohl's was actually the one to kind of cancel it altogether. And I played the $30 strike, which was good because I kind of suggested the 34 strike, which is way up here. In my last video, I said if you're ballsy enough, you could play the 34. It's reasonable support. But after last week's little dip, when we found out that the franchise group buyout price went from $60 to $50 and Kohl's spiked down a bit, like 5% in a matter of 15 minutes, that's when my eyes opened up. I'm like, okay, we're playing with fire here. Let's get a strike that's further out of the money than I normally would have played. I normally would have played something like 34, but because I knew the risk was more upfront and more apparent, I went with the $30 strike to play even safer, way out of the money. But even that wasn't enough to get me out of it, because it dropped. And even though it pushed up midday as high as $29.77, 30 cents away from my strike price, it actually rolled back over at the end of the day, closed at $28.72. Is that right? $28.68. And I got assigned. So I'm going to be a shareholder of Kohl's come Tuesday when the market opens. I sold 2 contracts. I'm going to have 200 shares at an average price of $30 per share. And right now, Kohl's is at $28.68. The thing is, when it comes to doing the wheel strategy and getting assigned, what I like to do is, instead of realizing the premium on the cash secured put, because either way, you're keeping that premium. Whether you get assigned or whether the contract expires worthless, you keep that money no matter what. And in this case, it was like 33 bucks per contract. But instead of considering that and allocating that to my June profits, instead I allocate it to the open share position that I'm about to have, and I reduce the cost basis instead of realizing it as profit. You can kind of do it however you want. If I allocated it as profit specifically for the month, then my average cost of my shares would be at $30. It would not change. But instead, I'm going to allocate it to my position, and I'm going to take that $33 that I made per contract, throw it at the total cost of my shares that I'm going to buy on Tuesday, and it's going to reduce my cost basis. So instead of having, 200 shares at $30 per share, it's going to be 200 shares at $29.67 per share. So I'm reducing my cost basis by 33 cents because that's how much I received from selling the cash secured put. So that looks a lot better, doesn't it? I'm 33 cents closer to the current price that I would have been had I just bought shares at $30. So that's always nice. So that's going to be my cost basis. I'm going to need Kohl's to get above $29.67 for me to start making money on the trade. And of course, when Tuesday comes around, we're going to sell covered calls. And if I have to hold it longer than I think, then I'm going to collect dividends. This is all part of the plan. I know a lot of times it's just the puts expire worthless. I keep the premium and I move on to next week. That's usually how it goes. But every now and then you get assigned. And it's not a bad thing. It's all part of the plan. You just move on to plan B. It's not plan A anymore. You move to plan B. You're holding shares. What do you do now? You sell covered calls and you collect dividends. It's that simple. Look at the options chain. The premiums are no longer inflated as they used to be. They're still decent premiums, honestly, but they're not nearly as high as they were before the buyout was ended. Looks like I can get some decent premium even out of the money as far as $31 per share. So I might do that. I might sell the 31 strike covered call, bring in about $30, which will even further reduce my cost basis. If I collect $30 from a covered call, that means, or I guess you can look at it as 30 cents. If I collect 30 cents on the contract, that's going to reduce my cost basis to $29.37, which would be like way down here. So that's the beauty of the wheel strategy of selling covered calls and cash secured puts, is it improves your cost basis if you do get assigned. So I'm going to sell the 31 strike most likely, and if I get assigned, not only am I keeping that premium from the covered calls, but I'm going to be making like over $1 per share on 200 shares. So that I stand to possibly make, if all things go well, maybe $200-300 on this position if I get assigned at 31. But if not, then we just do it all over again the next week. So that was Kohl's, and my fourth and final play of the week, same type of situation, was with Macy's. I sold the 1850 strike. It closes at 1797 on the week. I'm getting assigned. I sold 3 contracts at 1850, so I'm going to have 300 shares of Macy's on Tuesday at 1850. But when you adjust the cost basis by the premium I received, which was 13 cents per contract, my adjusted cost basis is going to be 1837. So instead of 1850, let's just make this a little bit more dramatic so you can see the difference. Instead of 1850 being my average price, my cost basis, it's going to be 1837, which is way down here. Not a huge move, not a huge difference, but it's a difference nonetheless, especially on a small price stock like Macy's, $18 per share. 13 cents goes a long way, so we'll take that. So that's my cost basis, my adjusted cost basis come Tuesday. I'm actually going to make this blue. That's what I've been doing when I own shares. I like to just have a blue dotted line as my cost basis so you can kind of see how I'm doing. So this is going to be my adjusted cost basis, 1838. If you look at the 15-minute chart on Friday, I mean, we were above the strike a bit Thursday, but we were just trending lower all week, and it just wasn't good. I just think the retail space as a whole, maybe even Kohl's sympathy momentum after the deal fell through, hit Macy's, and it just kept going. It did have the similar rally as Kohl's did second half of the day, got above $18, but rolled over by the end, closed at $17.97, so just about $18, and that's it. So I'm only going to be about 40 cents in the red. That's really not that bad. I'm getting assigned because the stock dropped a lot, but it's only 40 cents away, so it's not that bad. I have 300 shares too, so this actually could be a pretty big winner, possibly. 300 shares. If I get a $1 move, that's $300 profit right there. So looking at the options chain, not bad, honestly. I'm thinking to sell the $19 strike, which is right now giving me about $20, so 20 cents. If I sell that and get $20 for it, it would adjust my cost basis by 20 cents. So it would be from 1838, or originally 1850, down to 1838, and with the covered call premium, it would bring it down to 1818, which would be way down here. So all of a sudden, I'll draw another horizontal line for 1850 right here. So all of a sudden, I went from originally owning shares at 1850, the yellow line, to having shares at 1817. That's the power of selling options. Even if you get assigned and you're holding shares, you can adjust your cost basis just by selling options against it. So it's an improvement on my position of 33 cents. All of a sudden, I'm really close to the money. Instead of being 50 cents away from it, I'm only 20 cents away. And if I get assigned at 19 with a cost basis of 1820, that's an 80-cent gain on 300 shares. That's a $240 winner. So I'm very happy with that idea. So that's going to be the plan. Bring this back up to 37. I'm going to sell the $19 strike on Macy's and hope we get a little bit of a pop. We're nearing some support down here around $17, maybe $16.80. 80 is the low. 16.80 is the low. So we're getting near that bottom. Maybe we'll get a double bottom and a pop up. We'll see. Looking at the weekly chart, we have the 200 moving average on the weekly chart right here, the purple line. And last time we hit off of it on the weekly chart, we ripped up to $23 per share or $24 per share. So let's see if the 200 can help us out again. We're almost oversold on the weekly. Same type of deal on the daily. We're closer to being oversold on the daily, but hopefully we don't get oversold because I don't want the drop anymore. Let's see if we can start popping up with that 200 weekly moving average in our favor. So that's the week. I profited $20 on ZIM, $35 on Mosaic MOS, and I actually profited another $5 on Coles because I had a little bit of extra buying power that I wanted to put at work, and I sold a $27 strike, which was down here, for $5. Like, it was so cheap, but it was just because I had a little bit of extra money. So let's just see if I can get anything for it. And I sold the 27 strike further out of the money. That one ended up being safe, expired worthless, made $5 there. So that's that week. Let's just go into the Excel file where I can show you the profits on the week and the profits on the month and the profits the past 3 months. So let's do it. So here it is. Here's my file. We have June right here in the blue box for you. $529 profit, realized profit on the month. That's great. That's a 2.38% gain on my capital for the month, which is very nice. You can see all the names that I played here. It's actually, I do have to give a little bit of a disclaimer. This includes 2 day trades that I should not be doing. That was me being very bad, very naughty. I shouldn't have played day trades because day trades, a lot of risk. Day trading options, and this account, the wheel account that I have, is a very risk off account. I can't be throwing day trades in a risk off account because it's just going to completely blow up, or has the potential to completely blow up all the hard work that I've done to get to this point. So luckily they ended up being winners, and that accounted for $195 of my month. So that skews the data a little bit. If I get rid of it and look at just the wheel strategy, I made $334 or 1.5%. Still pretty good. I mean, making 1.5% on your money in a month is like an investor's dream. That would be $334. Doesn't sound like a lot to a lot of people who like to day trade. You can make that in a day. You can make that in 5 minutes, no problem. Yeah, I get it, but there's a lot of risk to that. It's not as easy to do that consistently as it is to do this. It's very safe. I mean, $300 in 1 month. That's a long time just to make $300 on the stock market, but in reality, that's good. I mean, I have a day job. You know, this is just extra money on top of it. Extra. Like, it's money that I didn't have before. That was relatively easy to get. This pays for most of my bills. Aside from my mortgage, this pays for my internet, cable, electric, maybe even my gas too. Like, all of it paid for by this. And that's very good. So can't complain about that. And so these are all my names here. Just little base hits. And it adds up. $15, $34, $26, $30, $48, $50, $20. Like, just keep doing that. It adds up. So that's that. If I go to the account summary, I have this little summary here where it just shows what I started with. Started with 20,000. Then on April, I made 677, which brought my account up to 20,677, which is a 3% gain. Then May, 1,500. That was a 7.5% gain. June, I made 2.3%. So my account went from 20,000 to 22,700. So I've made $2,700 in realized gains the past 3 months. And that's a 13.8% gain on the account with the wheel strategy, which is very nice. I have another tab called Open Covered Stock. This is where I keep all of the shares that I own. If I have an open share position because I got a sign and a cash secured put, they go here. And this is where I factor in all the premium on the cash secured puts, all the covered calls. It's all factored in here, and it adjusts my cost basis for me. I have formulas all over the place to show, you know, the change in P&L, the change in cost basis. So if you look at Coles, for example, I'll have 200 shares at $30 per share because that was the strike that I sold. The $30 strike, I got assigned 200 shares at $30. But when you factor in the premium received, my adjusted cost basis right down here, $29.65. And when I add a covered call section, a covered call data here on Tuesday, it'll lower my cost basis even further. Let's just say I can sell 2 contracts for $30 a piece, or 30 cents at a strike of 31. That will give me $60 credit, which will reduce my P&L, or will reduce my cost basis even more, down to $29.35. And you can already see the loss is getting a lot different. So without the premiums at all, the loss would be, at the moment, at the current market price, $264. But when you start selling options against your position, the loss has dropped $130 just by selling puts and selling calls all around the same position. You bring in that covered call premium, you reduce your cost basis, which effectively lowers your your loss on the trade at the current market price. So this is what I'll do. If I'm able to sell 2 contracts at 30 cents a piece at the 31 strike, this is how it will adjust it. And then if I want to see what would happen if I actually get assigned to 31 and sell everything at 31, well, that means the market price in the bottom left corner will be 31. So I'll type that in, hit enter, and you see it'll be a net gain on the whole position of $330. That's a $200 gain on the shares, $70 gain on the put premium, the cash secured put, and then $60 gain on the covered calls. I'll wrap all that together. $330 gain is what I'm looking to get if I get assigned to 31. But we're not there yet. But this is just how I'm just showing you how I do it. You can see Macy's over here as well. I sold 3 contracts, got 12 cents a piece. So instead of my cost basis being $18.50, it's really $18.38. And I'm going to sell covered calls on Tuesday against that. And we're going to see how it all works out. Hopefully within the next week or two, I get assigned for a nice profit, and then that'll just boost my July numbers a lot, honestly, because really the biggest profits you can get with the wheel strategy would be on assigned shares. Because once you own shares, hundreds of them to be exact, that's when you can get some real gains in your account, because every dollar in your favor is at least $100, which you might have to wait a whole week of selling multiple covered call cash secured puts to get $100, while when you're holding shares, you can get $100 relatively quick, as long as it goes in your favor. So that's where I stand, 530 on the month. I have the open covered stock here with Kohl's and Macy's, and we're going to look to continue next week. While I sell covered calls and hold those names, I'm going to open new positions with cash secured puts on a few names that I have here that I'm about to go over. So let's get into that. Now, I'm going to lead off here by saying the market's not open on Monday. It's going to open on Tuesday. So that means there's one less day of time on these contracts, on these weekly contracts, which means the premiums aren't going to be as favorable. We just had this the other week, the week before with Juneteenth. We went through that, and we saw just how piss poor the premiums were come Tuesday. So it's going to happen again here, which means the plays that I offer might not be playable on Tuesday, because the premiums that I'm looking at the moment, they're not reflective of Tuesday, of the market opening on Tuesday. The premiums are going to drop a lot because it's one less day of time on it. So a little disclaimer there. Also, I don't feel the greatest on these names. I have 3 options here, and there's not really one that I absolutely love. They're all pretty close to the money. Even though they're at support, they're at legitimate support. That's why I'm going to give them as options, but they are pretty damn close to the money. We're starting with Citigroup here, ticker symbol C, and I'm looking to play the 45.50 strike. Right now it's at 46.87. The 45.50 strike pays $36. Come Tuesday, that might drop tremendously, so we'll see what ends up happening. But as of right now, it pays a fair premium at 45.50. You can see already on the daily chart just how much support is down here. I mean, look how many days has hit off of 45.50 and has bounced every single time, including the past 2 days. So that's very favorable. If we zoom out to maybe the weekly chart or something, it goes even further back here where this little area was resistance back in 2020. And then we never looked back after we broke through it, and now we're finally coming back and it's acting as support pretty strongly too. It's being tested a lot, so who knows, the next time it tests, maybe it actually breaks through and we get screwed. That very well could happen, but it's a fair area of support and it offers decent premium, and it's a bank. I actually like bank names for the near term, 6-12 months. I think with higher interest rates, more possible loan demand, less deposits, so the net interest margin is going to be going up. I think they're going to be somewhat favorable in the near term, so I don't mind it. I'm going to move my face back down to the bottom right where it usually is. The next one I have is HAL, Halliburton. This is an energy company. It's had a bit of a rough patch the past couple of weeks when energy got crushed, but if you look here, we have the 200 daily moving average right here, which has been bouncing off of the past couple weeks, which is very nice. I'm looking to play the $30 strike, which is below the 200 moving average, so we have that support. It's a whole dollar level, $30 on the dot. So we have that in our favor as possible support, because that is a psychological number. Whole dollar levels like 30, 40, 100, 1000, that usually has access support or resistance depending on what side of it it's on, just psychologically based. And then you look back, you see it was plenty of support back in January. It held, never looked back. We're coming back down, holding again. 200 moving average in our favor. Very nice. If you look at the weekly chart, nothing the weekly chart's really showing us that the daily chart isn't. It has a 50 moving average down at 2860, but that's a little too far down. We don't want it to get to that point. So the RSI is not in our favor, but we have horizontal support and the daily 200. Looking to play the $30 strike. It's at 31.43 right now. Again, I'm not too crazy about these options, but given the chart, they are reasonable levels to play. It's actually paying for $30 strike. It's paying about $36. Just like I said before, that'll be drastically different on Tuesday. We'll see if I even play anything, quite honestly. If these premiums are destroyed too much by Theta when it opens on Tuesday, I might just do an Amazon play and leave it at that. But we'll see. And then the last option that I got going on is X, US Steel. This is another dangerous one because the strike I'm choosing is literally 40 cents away from the current price. That's it, just 40 cents cushion. That's not a lot of cushion at all. But looking at the chart, looking at the 1750 strike, if I zoom out, you can see that there's a lot of support around this area. We bounced near it, around $18 we bounced off of in January, never looked back. Came back down. Looks like we're already finding some support the last 2 days. We're not really getting through 1750 that much. If I zoom out even further, you can see the price action around this level before in early 2021. We got below it a little bit, but we zigzagged, so there's clearly some type of demand zone from this section forward, and you can see just how the price has acted every time it got to that demand zone. We'll look to see if we can get a little bit of a push coming up. We're already oversold on the daily chart. We're oversold right now on the daily chart. So that's very good in our favor. Look to see a little bit of a bounce soon. And you go to the weekly chart, the 200 moving average on the weekly chart is right there. It's at $18 is where the 200 moving average is. And the current price is 8 cents away, 9 cents away from it. So maybe we'll get a little bit of support from that too. You can see how the 200 on the weekly chart has acted before. Every time it gets close or even gets through it, like right here, it bounces. So you love the 200 moving average, especially on a high time frame. Let's see if this can help us out. Even the weekly chart is almost oversold at an RSI of 34.50. Daily chart is already oversold. So although it's very close to the strike or to the current price, there's not a whole lot of cushion between the current price and the strike price. I think it's at a pretty solid area of support. So I think that's a good option to play. The 1750 strike, because it's so close to the money, is paying $40 right now. So that's not too bad. This might be a good opportunity to get that high premium at a safe level. So those are the 3 names today that I got for this week. We'll see what happens when Tuesday comes around and the premiums get adjusted by that extra day of Theta. Like I said, I might not play any of them. If the premiums are too unfavorable, I might not play any of them. I might just go to my fail-safe option of Amazon, because Amazon premiums are always very nice, and I would not mind owning it for the long term, or at least the near term, 6 months, 12 months. So I might just do that. We'll see what happens. But if you really want to know what I end up doing, follow me on Twitter. Link in the description. I post all of my trades there. Once I get in a trade, once I get out of a trade, I let you guys know. I tweet about it. Any changes to the game plan that I laid out here will be tweeted about. I'll let you guys know exactly what positions I'm in, and I'll let you know exactly when I get out of things. So that's the end of the video, guys. I'm going to throw up a graphic just to summarize the names for this week. Again, Citigroup at 45.50, Halliburton at 30, and US Steel at 17.50 for this week. Again, follow me on Twitter just in case I do a change to the game plan that you want to be aware of. And, well, until next week, guys, have a good one. Like the video, subscribe for more content, and I'll see you all next time.